Okay, we are live now. Hello, everyone. Welcome to Business Learnings. As the topic of the video suggests, in this video, we will talk about the Great Indian Slowdown, the paper that was released by Arvind Subramaniam, the Chief Economic Advisor of India. He was the Chief Economic Advisor of India a few years ago. The problem that he describes is the Great Indian Slowdown, and he describes the problem by telling us about the four balance sheet problem. So in this video, I'll talk that about in layman terms, so that everyone can understand what this means, what the paper means. So first, we'll talk about the twin balance sheet problem and then how it evolved to become a four balance sheet problem. So, balance sheet, if you are not aware of that, balance sheet is a financial statement. It tells the health of a company at a given point in time. So, it has all my assets, it has all my liabilities. So, a company will have assets like what kind of assets a company can have? A company can have money, a company can have factories, its employees, uh, some copyrights, some uh, intellectual property. So all these could be assets. Liabilities could be the loans of the company, uh, the debt, the bonds that it has issued, etc. Those could be the liabilities. So what is the twin balance sheet problem? Uh, so if you recall back in 2008, during the time of global financial crisis, uh, after that time, by that time, Indian infrastructure companies, they had a very good expectation of growth of India, and that growth simply did not materialize. India did not grow at that level. And you know what do infrastructure companies do? They take loans, they perform their projects, build roads, bridges, etc., and all those infrastructure activities. And to finance the money, they take loans from the banks. After the project is done, they keep on earning something from that project, and they keep on returning the loans, the EMIs to the banks. Okay, that's how they work. Now, they had expected a lot from the Indian economy, and that simply did not materialize, which means that now they do not have enough money to pay back to Indian banks. And those were the times when, uh, about 80%. So most of these loans were taken from PSUs, and these PSUs simply gave out loans. I would say they had to be loan appraisal had to be very cautious, and the officers who appraised the loans were probably not very cautious on giving the loans. And a lot of loans end up becoming NPAs. NPAs are non-performing assets. If the borrower does not pay interest for 90 days, then we classify the loan as an NPA, which means that I might not be able to recover uh, my interest and principal or portion of it from that particular borrower. So that's how the problem arises. Now, the first balance sheet is of these people, these infrastructure companies who have taken loans from these banks. They are unable to pay back these loans, so their balance sheet is down, affected. Okay. Now, since they have taken loans from banks, and most of these banks are, public sector undertaking banks, uh, the balance sheet of these banks are under pressure because these banks are not getting their interest, they are not getting their income. How are they going to give interest to common people like us who have savings accounts in those banks, who have had deposits? How are these banks going to service them if they are not getting interests on what the money they have lent to other people, other corporates? So banks balance sheet is down. So I'll just put a data point here. About 80% of all the PSUs, 80% of all the NPAs, non-performing assets in India back in those times, they were contributed by PSUs, public sector undertakings. Just 20% from the private sector. You can imagine there must be something wrong that PSUs would be doing, right? There must be something wrong with them. and that probably would be the loan appraisal process. So we have two balance sheets, the bank's balance sheet and the corporate infrastructure companies' balance sheets. These two are down. Now coming to the third balance sheet of the real estate companies, for example, the companies who take loans, who build the builders who build buildings and then they sell it to common people like us or officers, etc. Uh, these guys, they had taken a lot of loan, they have built a lot of houses, and if you are following this space properly, you must be aware that the houses are not selling for the past 2 3 years as much as they used to sell 5 6 years ago. The sales growth in housing market has stabilized, it is not growing. And since these guys, these housing companies, they have borrowed a lot of money to build those houses, and they have borrowed these money from banks, from NBFCs, etc. We'll come to it later, from where have they borrowed the funds from. But the problem now is these houses are not getting sold. What to do? People are not interested in buying it. So the natural solution that comes in our minds could be, hey, if the houses are not selling, why not reduce the prices? No. The problem with reducing prices is a lot of these houses are used as collateral in taking another loans by these companies from other banks. Okay. So suppose there is, I have 1,000 houses worth total of 1,000 crore rupees, and this 1,000 crore rupees is given as a collateral to other financial institutions from where I have taken loans from. If I reduce the prices, the value of my collateral drops down, my loan value grows, drops below, and these banks are not going to like it because, dropping the value of collateral, no, banks cannot take that. In case the company defaults, bank will not have enough to recover it. So prices have to stay put. Even if they are not able to sell it, people are not interested to buy. So these companies eventually have to pay debt, have to pay interest. As the time passes, their interests keep on accumulating, keep on reaching new heights. So their balance sheet is gone, real estate company's balance sheet is gone. Coming to the fourth balance sheet, fourth company, ILNFS. So in September 2018, all of us know that it defaulted on its loan. On deeper investigation, it was discovered that of the 5 lakh crore rupees of loans given to these housing companies, about 50% of that, and 2.5 lakh crore rupees worth of loans came from NBFCs. Now you'll ask, how did these NBFCs came into picture? Banks give loans, like how did NBFCs came? So banks already had, remember I talked about the twin balance sheet problem, and banks having these NPAs, PSU banks having these NPAs, and due to those NPAs, banks now are under strict regulations by RBI that you cannot give poor quality loans. A lot of restrictions have been imposed, and that's why the banking sector, uh, the loan growth from the banking sector, core banking sector, is going downhill. So someone has to give loans. Who are they? NBFCs came into the picture, and they took complete advantage of this lack of loans disbursed by our common banks, commercial banks. So NBFCs will supply all these loans. Housing companies are going down. We discovered that NBFCs have given most of these loans. Since these housing companies, they are not able to pay back their interests, these NBFCs, they collapse. These NBFCs raise money from banks, from uh, LIC, from other financial institutions, from mutual funds, and now they do not have money. They don't to pay interest to those financial institutions. So they default, and that is the fourth balance sheet down. Uh, that is how the four balance sheet problem worked in India, and that's how, first the PSU banks, second the infrastructure companies, they defaulted on the loans, created a lot of NPAs. The PSU banks, their NPAs level rising. Then we talked about the real estate companies, third, and fourth, the NBFC crisis. So all of these hammered our Indian economy, and we are down, expecting to recover. In the next video, I'll talk about what is the solution to it. And these four problems actually contribute a lot to the current situation that we are in, the current slowdown that we are facing in India. If you have been watching this far, thanks a lot for watching. Please subscribe to my channel, and press the bell icon if you do not want to miss any updates. I'll keep talking about important stocks, economy, business in general, everything. Thanks a lot for watching. Bye.